Hello everyone and welcome to today's morning report on Tuesday the 12th of May with me, Rich Perry, market analyst at Hantech Markets. The European trading session has got off to a very weak start actually, and that's come under pressure from Wall Street, but also that move has been driven by bond markets, which are having a significant sell-off at the moment. Look at this sharp increase in the Treasury yields there. And that's certainly filtering through to equity markets. Wall Street was under pressure into the close yesterday, and that has just continued today. The move has also been exacerbated, I think, by the fact that the euro has started to rally on that news that the Greek government has paid the $750 million euro repayment back to the IMF. And that certainly helps to sort of put to one side for at least a little bit anyway the potential for default. So that's taken to be a positive for the euro, driven euro higher, and the euro is certainly still trading around a negative correlation with the DAX, and the DAX under significant pressure today, down 1.7%. on the DAX. FTSE is down 1.6% as well, so the markets across Europe are under a bit of pressure today. And that correction that we've seen in the the rally that we've seen in the euro has certainly dragged the dollar index lower again, and it continues to fall away, and it's now underneath that uptrend once again. It's sort of falling back towards the next support at 93.25 potentially, and continues on its way really towards that downside target from that top pattern that we had on that move below 9617. And I'll talk you through euro in much greater detail in a bit, but it certainly is an interesting chart at the least. So what else have we got to look out for today? Well, the manufacturing production for the UK is at 9:30 in a couple of minutes actually. In fact, that's probably coming out now, so give me one sec. It's coming in just ahead on the annual on the year-on-year out data to 1.1% on the year-on-year manufacturing, just above the 1% expected there. So that data's just beaten expectations. In terms of the industrial output as well, that's also beaten. So pretty decent set of industrial numbers there out from the UK. So that should help to boost sterling. And in fact, as we speak, sterling is starting to rise. So that's interesting. And this afternoon we've also got the JOLTS jobs JOLTS jobs openings. So that was the manufacturing production, and here we see the JOLTS, and JOLTS is actually expected to just slightly decline very slightly to 5.1 million, but obviously 5.13 was quite a significantly larger month, and it was much higher than expected last month. So just coming a little bit back off the top there, but no real significant deterioration, and the JOLTS jobs openings remain pretty strong in the States, and that would be potentially be dollar positive, but it'll be interesting to see how that one plans out. But I think the main focus today is this run higher on the euro at the moment, and that sort of takes me on to my chart of the day, which is euro sterling. Now euro sterling is a very interesting chart actually, because we've had this sharp fall away in euro sterling in the last 3 days on the back of that sterling strengthening on the UK general election. But it certainly looks as though there's a bit of a rebound going on at the moment. We've got a green candle, and that's certainly taken off during the European session anyway. But I would say that any sort of rally on this euro sterling probably would be a chance to sell now. I said in my morning report that I think that there are a lot of very interesting pivot levels on this chart. 72.20 is the first one. 72.20, if you go back here, 72.20 has been a consistent pivot level, provided the support throughout late March, early April, then provided the resistance in mid-April, again resistance, provided support a couple of days in May, and now once again, is it going to again provide the resistance? Interesting, because that sharp run higher in the euro has just turned round. Certainly with that manufacturing data from the UK has helped. And it certainly looks as though that pivot level is in place. And I said in my morning report that I saw this bullish divergence with the falling or the lower lows on the price, but the higher lows on the RSI and MACD. And it certainly looks like it's turned around near term. But I think any rally is the chance to sell. You could see a first selling point at 72.20, as I said, but above there's another. If it does continue to go higher, there's another resistance at 73 figure, which is another pivot level, as you can see here. But also, what I'll show you, interestingly enough, very quickly, that I didn't talk about in the morning report, was this Fibonacci retracement of that big sell-off in euro sterling. 73 figure pretty much is that resistance, and also the 50% retracement of the Fibonacci retracement of that sell-off. So you'd say that that would be where you'd start to see this coming in. And look at this also, 23.6 as well at 72.18, and that's obviously not exactly accurate, but 72.20 certainly looks to be this key pivot level near term. So a couple of Fibonacci levels backing up those pivot levels as well on this chart. So very interesting, that, I would say. Anyway, I wish you good luck in your trading on euro sterling today. I think, as I said, this rally could well be sold into, and we could well start to see this selling pressure coming through again. So I wish you good luck, and I will speak to you again later. Thank you.